Markets unimpressed by Fed's dovish stance in meeting minutes. Wall Street stocks finished marginally lower on Tuesday following the recent winning streak that took major indexes to fresh all-time highs. The International Monetary Fund said that it expects the world economy to expand 6% in 2021, up from the 5.5% it had forecast in January. However, major indexes corrected a tad lower amid overbought conditions. The S&P 500 slipped just 0.10%, Dow Jones Industrial Average fell 0.29%, and the tech-heavy Nasdaq Composite slipped just 0.05%. Asian equities were mixed on Wednesday, with MSCI's broadest index of Asia-Pacific shares outside of Japan rising 0.3%. Trading in Toshiba Corp's shares was halted after the conglomerate confirmed it had received a preliminary acquisition proposal. Japan's benchmark Nikkei rose 0.12%, and the Shanghai Composite Index shed 0.10%. Australia's S&P ASX 200 gained 0.61%, while South Korea's Kospi added 0.33%. In Europe, stocks closed mostly lower as investors assessed fresh economic data. The IHS Markit's final Eurozone composite PMI showed business activity in the region bouncing back in March despite a reintroduction of restrictions in several countries. The composite PMI came in at 53.2, up from 48.8 in February and above the 52.5 flash estimate. The UK service sector logged a strong rebound in March as activity, new orders, and employment picked up from February. The Pan-European Stock 600 index ended the session down by 0.2%, with Britain's FTSE 100 bucking the trend downward, boosted by a weakening of the pound. Germany's DAX ended 0.24% down, while France's CAC 40 edged down by 0.01%. The Federal Reserve released minutes from its March meeting later on Wednesday. The central bank officials indicated that despite an improving economy, an easy policy will stay in place until it produces stronger employment and inflation, and won't be adjusted based merely on forecasts. At that, officials were unworried by the sharp rise in Treasury yields, assessing that as reflecting the improved economic outlook, some firming in inflation expectations, and expectations for increased Treasury debt issuance. While minutes from the Federal Reserve's March policy meeting showed that the central bank staffers were in no hurry to tighten monetary support, U.S. stocks closed nearly unchanged on Wednesday. At the same time, gains for several big tech stocks nudged the S&P 500 to a second record high in 3 days. The Dow Jones Industrial Average rose 0.05%, the S&P 500 added 0.15%, and the Nasdaq Composite Index shed 0.07%. As for currencies, the dollar managed to bounce from two-week lows to end mostly higher overnight. The greenback showed no immediate reaction to the FOMC meeting minutes, as the headline statement was broadly in line with market expectations. As such, the euro-US dollar briefly exceeded the 1.1900 figure before retreating back into negative territory. On Thursday, the pair regained bullish bias, but the impetus looks too modest to bet on robust gains in the short term. On the data front, German factory orders rose by 1.2% month-on-month in February. On a yearly basis, factory orders jumped by 5.6%. However, the shared currency shrugged off the report as the pair kept its range around 1.1870, almost unchanged on the day. Meanwhile, the ECB chief economist Philip Lane said that inflation is significantly volatile amid the pandemic, but it remains low overall, while favorable financing conditions must be maintained. Asian stocks were mixed on Thursday morning as investors digested the U.S. Federal Reserve's continued commitment to its supportive policy. On the positive side, U.S. 10-year Treasury yield stayed below a 14-month high of 1.776%, hit on March 30th. The MSCI's broadest index of Asia-Pacific shares outside Japan was flat and also little changed on the week. Japan's Nikkei eased 0.3%, and Chinese blue chips shed 0.1% amid the subdued trading. U.S. stock futures nudged to another record high. Elsewhere, Brent crude finished marginally higher on Wednesday, shaking off an earlier decline. The Energy Information Administration reported a crude oil inventory draw of 3.5 million barrels for the week to April 2nd, along with a hefty gasoline stock increase and a build in distillates. A day earlier, the American Petroleum Institute had estimated a crude oil inventory draw of 2.62 million barrels. Early on Thursday, oil prices came back under some selling pressure, still struggling to overcome the $63 figure amid ongoing concerns over the outlook for recovery in global demand. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.